I was posed with the question whether or not the inverted yield curve can predict what the 10-year Treasury bond will do. And according to this graph, it appears that the answer to that question is no, it cannot. The red line shows how the yield curve has inverted over the last few decades, and it preceded the recessions. Now, the blue line is the 10-year Treasury bond that's been gradually decreasing and doesn't seem, to the best of my knowledge, correlated to what the inverted yield curve has been doing. With the green lines, you can see the rate at which the 10-year was at when the curve inverted each time. And you can see it's around 8. And then in 2001, it was around 5.5 or 6. And then around 2008, it was around 5. And then now we're at about 2 for the 10-year. I believe we're at around 2.5 right now. So it seems to be quite different, but it is interesting to see how the 10-year has been gradually decreasing. But to add a little bit of extra context and some extra visuals, I did compare the 10-year to the 2-year Treasury bond. And this is since 1980. I'll zoom in a little bit, but you can see the 10-year is at 1.56, and the 2-year is at 0.14 right now. And there was a fairly big gap that was created around 2008. You start to see it kind of separate quite a bit. But come around 2020, it comes very close. Like you can see they're touching. And to zoom in a little bit, from 2010, this is what the 10-year and the 2-year look like. The 2-year in red, and it's at very low levels. So we're at a point where we're propping up the market at record levels, and eventually the low interest rates that we currently are afforded, it's going to get to a point where it's not going to have the same impact on the economy. Just like with the stimulus bills, the stock market has been going up significantly less each time a new stimulus bill gets introduced. And it's almost like it's starting to gradually lose its impact, lose the impact it's having on the markets. Because you can only add so much stimulus before things are get to a level where it's just like it's not enough anymore to push it up even higher. And you can see we're gradually starting to get up to those levels. So I just wanted to go over that. We got a decent difference between the 10-year and the 2-year right now, but I thought it would be helpful in adding context to where we're at, just viewing the different visuals that I have here. Thanks for tuning in.